Hello and welcome back to the channel. So since my last update, I have decided to sell out of my Alibaba position entirely, and we took a loss on this one, but I've lost complete faith in the company. The main reasons are the slowing growth rate. So when I bought this company, it was growing 20-30%. Then it slowed down to 20, then to 7 to 10%. And now this latest earnings report, there was no growth at all. And then they're reporting that the cloud business is growing at a slower pace. So they went from 12% growth to about 10%. And then they're even losing customers in their cloud business. So they cannot compete. So they don't have this advantage that I want my businesses to have. They don't have this moat. They can't protect their business. Not just from other competitors, but also from the Chinese government. So, they've been locking down the entire country. And I thought that they would have their own financial interest in mind, above all else, above wanting to just control everything. But that seems to be what they're most focused on, not the economic prosperity of their country, but the control that they have over the population and over its companies. So because of that, and there's a couple of examples, like the banking system failure, where people have lost all their money in the bank, they can't get their money out. There are also a lot of real estate issues in China as well. And I just thought about, kind of akin to like buying a house. You should view your stocks through the same lens. So think of it like a piece of real estate. Think of it like a home. What's the most important thing about a home? The location. So I just really underestimated this, and I totally got this wrong when I bought this company. I did not consider the potential risks and downsides of the location where this home or business was located, and that's my mistake. So I totally got it wrong. I thought that the Chinese government would care more about their own financial well-being and their economy, and that's why they would let their businesses thrive. But that hasn't happened. It doesn't look like it's going to happen at all, and because of that, I'm not interested in this investment any longer.
I find your presentation is exhausting and complicated. And I couldn't imagine having the energy to deal with that.
This doesn't sound very positive, Barbara.
I'm out.
That's why I totally sold out of it. And so the biggest takeaway I'm going to take here, for just wanting to sell out of stock in general, is if the story changes on your company, definitely consider letting it go. Like, is it a short-term problem or is it a long-term problem? For me, I think it's going to be a long-term problem. I don't see the Chinese government going anywhere. I don't see them all of a sudden caring about their economy. I mean, maybe out of necessity, but not before crashing and tanking it like the way that they are. They're shooting themselves in the foot. I don't want to be part of that. So I sold out. And this entire year, the market has been going down steadily. And you know what? A lot of opportunities have showed up. A lot of companies and businesses in better locations. So I can hold Alibaba, which is located over an active volcano, or I could invest in the Canadian market or the US market. With that said, please follow along with the channel. We're near 500 subscribers, and I'm going to roll the intro and then get into my buys and sells. Over the past month, the stock market has been pretty kind. We're up $929, up 6%. TFSA value being $16,410.40. And then all time since starting the portfolio, we're up $680.57 or 4%. We've been in the red for a little bit of time, not as much as some other portfolios I've seen. But that's just due to the valuations I'm paying for the companies and the fact that I'm picking like pretty safe blue chip companies which don't decline quite as much in the bad times. But that's why I like dividend investing in general, is just no matter what the market does, like this whole year has been down, but we're positive right now. And this is primarily due to dividends. I'm going to show my dividend income since starting the portfolio at the end. You'll note how much of the return is just due to that, just receiving passive income as you're a business owner. You are getting your share of the profits every 3 months, no matter how things are going in the market. The company will produce cash flow. It will produce value for you. So if we're looking at the positions themselves, Apple has been rocketing the past month, going from the 140s to like 170. So this is our best performing position to date. It's doing very well. Algonquin had decent earnings, but again, the trades are pretty flat. If we do take the dividend into account, I am in the green in this position, just not in the share price, because they do pay about a 5% yield, so a pretty good starting yield right now. And then with the sale of Alibaba, we rolled 3 more shares of ATD, so we went from 4 shares to 7, and it's in the green slightly. So I mean, that's nice to see. I still think that this is a pretty well priced stock. I'll be buying it all the way up to 65. Again, that's my own calculation, not financial advice. I could be totally wrong. It could plummet tomorrow, but I think overall solid business in the consumer staples, which I really don't have anything in consumer defensive. So this is one I'd like to build up. And I went really, really heavy on Aritzia, and I'm really glad I did, because I really felt this one was very, very underpriced at like $36, $37, and it shot up to 45. It was even at 46 yesterday, but up 18%. So that was another one of the reasons why I sold my Alibaba, was that I identified a better opportunity in a faster growing company at a much smaller size, with a lot lower risk, a really good balance sheet. Nobody's out to destroy them, at least not the Canadian government. So I don't think they have it out for this company. So they should be okay. And Brookfield is also basically rolled back into the green just slightly. So that's doing very well. Scotiabank, is also climbing out. So the Canadian banks, like all the financial sector in general has taken a huge hit. And this is just American, Canadian, just everybody was pricing in this horrible, horrible recession. I don't know if it'll happen necessarily. We're going to see the banks present their earnings. We'll see what's really going on. But long term, I'm not worried about these, just reinvesting my dividends in the banks. So we're going to continue doing that. With DFN, we just I acquired enough shares to buy a free share of it. So they paid us about a $10 dividend. I used about $8, bought another share. So this is going to give us an extra 10 cents a month. So we're just going to compound this every month. With the remaining money, we can invest it wherever we like. I kind of want to get my really, really high income and even my dividend stocks to the point where they could just purchase themselves. And that way I'm not really feeding money into them unless I want to get more of them. So it kind of frees up my future deposits. I can look for the best value at the time, because that changes in the market all the time. So you really need to keep track of what companies are trading for, how much do you think they're going to be worth in the future, give a discount so you have a return to the future, so you're paying less than what that's worth, that future stream of cash flow is worth, and that's where your return should come from if your assumptions are correct. And Enbridge has been doing incredibly well. It's up 10%, paying us over a 10% yield every single month. So this is paying us $7.80 every single month. I've just been reinvesting that elsewhere since Enbridge has been doing really, really well. I would like to probably double this position at some point, but I have to wait for a pullback in Enbridge. So whenever there's like a oil crash or oil bust, we should see that happen. Ethereum, I bought one more share, so we went up to 56. So cryptocurrencies in general have not done very well, so we're just buying a little bit here and there. This is a very small position for me. going to keep my risk low for this one because the risk is extremely high. There's a very high chance I lose all my money in this investment. I could also make a ton of money. That's also possible. So for that reason, small position for me. That's what I'm comfortable with. Don't invest in crypto unless you're willing to lose everything. And with Google, they've actually risen up a lot. So they're not down as much as before, so they're doing quite well. HYLD paid us about $15.40 dividend. So what I did was I just reinvested that right back into the company. I bought another share of HYLD, and I'm just going to keep doing that every single month. So this is going to continue growing on its own. If I want to purchase more HYLD in the future, I'll do that with future deposits. But right now, I'm pretty flexible in my deposits. I'm just reinvesting my dividends back into the stocks themselves. For Intel, this is our worst performing position, but again, I do not expect this company to look good to investors for a couple of years. So I have time to hold this position, collect a dividend. I can even add to the position later on. I want to keep it to a reasonable size on my portfolio, maybe around 5%. If it tumbles more, maybe I'll add a bit more aggressively to it. And then with Microsoft, I actually took my the Apple dividend I received. I invested it right back into Microsoft. So we got a tiny bit of Microsoft. I just think at the current prices, I think Microsoft is more attractive than Apple, just in terms of value right now. If Apple were to go down to the 140, 150 range, then I would have had no issues reinvesting the dividend right back into the company. But as it is, I think Microsoft is trading at a better price. It's growing a little bit faster than Apple. But Apple does have its own qualities that Microsoft will never have, and that's just brand appeal. The Surface line will never be a MacBook. It's just not going to happen. There's a reason why we have Apple stores and we don't have Microsoft stores. There's a very good reason for that. And we also reinvested the dividend right back into TD Bank. So we're a little over 18 shares of TD, and I've been rolling up any extra cash I have into that position. And if we look at the dividends earned since starting the portfolio, we earned $720.72 in dividend income since starting the portfolio. Annually, we were making about $817.64. So if you remember, our portfolio was up, a little, about 600 or so, 700, and it's pretty much all dividends at this point. All of our gains are pretty much from dividends. So if the market did better, obviously we'd be up higher, but it doesn't really matter. I just want to build this stream of cash flow. And our income actually went down because I recalculated one of our ETFs, which is ETHY, which is the Ethereum ETF. When the price of crypto is down, they're not going to sell as many call options. The income is lower. So for that reason, our income is slightly declined from last week. You can see the differences monthly, weekly, the daily average, but overall, we're going to trend back, bring it back up. And if crypto does go up again, like if it goes back to where it was, then we're going to have an additional $2 a month in passive income. But that's totally fine. I'm in no rush. We're not using this income to live off of just yet. We're just reinvesting it back into our portfolio. So I'm just going to end the video off with a question to you guys, and that's going to be, when do you think is the best time to sell a stock? And maybe you have an example of, when you decided to sell a stock and the reasons why you did that. That'd be very interesting to hear in the comments below. And if you're not signed up for WealthSimple yet, you can feel free to use my link in the description below, and you can get a couple $1,000s worth of free stocks in the description below. So have a great day, everybody, and stay invested out there, and don't be scared. Just keep investing consistently over time, and you'll do well.